Good
Good
morning.
morning. Yeah, good morning, James. How are you?
Thank you very much for doing this. I mean, Scottish Mortgages is a fascinating trust, but there's quite a lot going on with the portfolio, as I discovered talking to you the other day. So I'm quite keen to find out more about the thinking behind that. Do you want to just run through, I've got a few slides here. Do you want to just run through quickly how everything works? I mean, it's probably something we can do quickly because most people know well, but I think for the sake of form, we probably should do.
Yeah, no, absolutely. I'll spend a few minutes just giving a quick recap as to what Scottish Mortgage is all about and what's our philosophy. So I guess in one sentence, James, I mean, the way I normally start talking about Scottish Mortgage is I kind of think that Scottish Mortgage is a portfolio of the most exciting growth companies in the world, whether they're public or private. And I think we kind of define our task, if you like, quite narrowly. And what I mean by that is essentially what we are trying to do is support visionary founders and management teams who are essentially trying to build transformational growth companies. And hopefully our reputation as long-term supportive shareholders gives us access to the best growth businesses in the world. And what really sits at the heart, of what we're trying to do is, we're trying to identify, those big drivers of change in society. What are the companies that can disrupt huge markets at those early stages? So I would say that's a very quick 1 minute summary of the sort of philosophy of Scottish Mortgage.
Cool, thank you. That sort of covers off this slide as well. I mean, it's done fantastically well. Can we just talk quickly about this slide, because it's something that has been talked about a few times, which is this idea that actually, if you don't hold a certain narrow group of stocks, you don't really generate any return.
Yeah, so if you think about what makes us different at Scottish Mortgage, I would say that one of the factors, within that is this belief in this long-term asymmetry of return. So what I mean by that is that we think that in any period, we should expect that it's a small number of companies that's going to have that dramatic impact on our returns. And essentially what our task is we're trying to focus on trying to identify those companies that have the potential to be one of those big winners, and then own them for long enough, so obviously that our shareholders can accrue that return. So in our process, as I say, the asymmetry really sits at the heart of what we're thinking. And when you look at the performance, James, over the last decade or so, and we can really see exactly that. Yeah, that's why the slide to focus on there. You can really see this asymmetry in action in the likes of Tesla, Amazon, probably some of our more well-known names. But really, you can see that our winners tend to win a lot more than our losers lose. And I think why this is important, really to highlight this, is thinking about how we sort of think about volatility as well. And I think that slide at the bottom there about maximum drawdowns, perfectly illustrates this, that, if you're going to be a long-term shareholder, then you have to be able to withstand, volatile periods. And hopefully what this chart shows that, for some of our top winners over the last decade, the likes of Tesla, Amazon, Tencent, Alibaba, these companies have suffered multiple drawdowns, over that holding period. And part of our process and philosophy is really having that ability, to withstand that volatility, by having that long-term time horizon, accepting that, volatility is really part and parcel of being an investor, and it's how you actually cope and deal with those volatile periods. And I think there's some good examples there, to say where you actually can see that our top holdings in the Tesla and Amazons have suffered those drawdowns over the period.
Cool. And then, of course, a lot of those weren't actually quoted when you first invested in them. I think that's another big differentiating factor for Scottish Mortgage.
Yeah, I would definitely say so. And I think this is it's becoming probably more and more of, I guess, an advantage of Scottish Mortgage, is this ability to invest in private companies. And this slide here really kind of shows you, I guess, what sits at the heart of our thinking when we started investing in private companies, is that companies are really listing later and later in their life. You know, if you go back to, you know, the Facebook days, you know, it was really a sort of prestigious moment, that sort of ringing of the bell of you know, the IPO in the New York Stock Exchange. We kind of think that over the last, you know, 5-10 years, the attitudes of founders have really changed, and that they really want to keep their companies private for longer. And you can see that, you know, with some of the companies that we have today, the likes of a SpaceX, ByteDance, Stripe. You know, these are not small businesses. You know, these are companies, you know, approaching 100 billion market cap, or valuation. Some of these businesses, and what we're finding is that companies are choosing to stay private for longer. But what that means also is that more value has been accrued, you know, prior to IPO. A good example quite recently is Ginkgo Bioworks, which is a synthetic biology company. You know, we first invested in Ginkgo back in 2016. I think it was in the Series C funding round, and the valuation at this point was 350 million. Now, Ginkgo became a public company in September at a valuation of 15 billion. So just to give you a sense, you know, all that, you know, value that's been accrued, you know, prior to IPO, you know, we want our shareholders to be able to, you know, benefit from that. And I think that our exposure to the private companies and the ability that we can do that is really quite a unique advantage of the trust as well.
Cool. And it does obviously beg the question as to how do you find them?
Yeah, again, I guess in the private space, maybe it's maybe just worth focusing on that a little bit, because what I would say, James, is that in the private companies world, how we are finding ideas is probably more down to reputation. You know, because of our reputation as being supportive, you know, long-term shareholders with a very aligned, I would guess a very aligned philosophy with the founders of these companies. What that means in practice is that we are being, you know, recommended, or we're being suggested to other, you know, private companies as, you know, we would be a good shareholder to have. So from that perspective, I think that, you know, our sort of reputation is growing in this field, and what that means is that, you know, we're getting access to companies, you know, who are very particular, if you like, about who they have on their cap table. You know, a great example is something like SpaceX, you know, where we've been shareholders for a number of years. But our conduct, if you like, as a Tesla shareholder over the last decade has really sort of helped, you know, facilitate that relationship with SpaceX, whereby, you know, Tesla has obviously had a phenomenal run the last, you know, 18 months, 2 years, but prior to that, it's endured some really tough periods in its history. And, you know, as shareholders, you know, supporting them during those darkest days, you know, when short sellers were all over them, you know, the rhetoric in the press was negative. You know, as I say, our conduct has been so supportive, has helped us have that reputation as a long-term, you know, aligned shareholder, and that's really helped us, I would say, in the private space particularly.
Cool. Okay. Let's have a look at the portfolio then. So this is the top 10. And I think Moderna's probably sticks out here, because I had no idea that was your biggest holding until yesterday. Obviously we know it because it's and the reason I suppose it's got there is because it's been rocketing up because of the COVID vaccine. So what is the attraction of that? And do you think is this a sort of one-trick pony, or is there a lot more behind it?
Yes, it's a good question. And one of my colleagues, James, gave this great analogy whereby he said that talking about Moderna as simply a vaccine provider was akin to pigeonholing Amazon as a bookshop in the early 2000s. It just doesn't do it justice. As you correctly say, Moderna is now the top holding in the portfolio. We bought this company at the tail end of 2020, and already we've seen a twofold increase, you know, in its value since then. But the key thing is, you know, we continue to see good upside, because I think at the end of the day, we really believe that Moderna has a very good chance of developing mRNA as a new class of medicine. And I think that really what what they're trying to do, and we actually spoke with Stefan Bancel 2 weeks ago. He's really he thinks there's so much growth beyond the COVID franchise, if you like, and especially in fields such as infectious diseases. He gave this great stat where he said in the past 40 years, we've identified 80 new viruses, but we've only developed vaccines for 3 of them. And I think that Moderna is probably one of the best positioned companies to drive a sort of radical change in how we approach infectious diseases in the future. So the company has this very diverse pipeline, looking for cures for, I would say, the 4 big killers, cardiovascular disease, cancer, infectious diseases, and autoimmune diseases. But what the success of the COVID vaccine has done is that it's improved its chances of success, both by proving that mRNA technology works, but also they've secured those cash flows from the vaccine, so we can have that continued, R&D in these other fields. So I think that we think that Moderna will become the dominant supplier of vaccines, not only in the COVID-19 one. I mean, there's increasing evidence that their technology offers a superior efficacy profile over the long term versus Pfizer. We know their platform is very scalable, and their speed of development allows them to code for the more recent variants, which obviously in turn enhances that efficacy. So, we're very, very optimistic about, the long-term future of Moderna, despite, as I say, it's had a strong run, but it is more than a one-trick pony, as some people may think.
Cool. Well, yeah, I put up this chart here. I know everything's a bit small, so hopefully people can read it. But I think this is a great, actually, in terms of like sparking questions, because it just shows you some of the themes that are going on in the portfolio.
Yeah.
So let's pick a couple of those out if we can. This Moore's law continues. Can you explain what that means?
Yeah. So it's I think taking it a step back, James. I mean,
okay,
if you think about what most people, the majority of people, I guess, obsess about is things like GDP, interest rates, inflation, what's happening in quarterly earnings. That doesn't really tell you about what deep structural changes are happening in our society. And on that basis, we think that we'd be much better if we concentrated our efforts on actually understanding what things like Moore's law and what are the implications, of Moore's law. And I think for us, when we think about this over our long-term time horizon over the next 10 years, what we would say is over the last 30 years, the impact of Moore's law has probably been relatively constrained in terms of what industries it's impacted. So probably the 3 industries that Moore's law has had the most impact on would be things like retail, advertising, and media. But what we see now is that the impact of technology and increasing computing power in other industries. So we think that its utility and applicability is rising, and we're now seeing the impact on industries such as healthcare. One of the areas we're probably most excited about is this intersection between healthcare and technology, and it's really to do with the advances in Moore's law that help facilitate that transition.
So things like deep mind, you mean that sort of?
Yeah. So I think in the healthcare space, what I would say on healthcare is that if you think about the backdrop, this has been an industry that's probably typically moves a relatively pedestrian pace. It's very much moved at I'd call the pace of the lab bench. And I think what we're seeing now is actually the applicability of technology to different healthcare applications. So, for example, one of the companies that we own in the portfolio today is a company called Tempest Labs. Now, they're transforming how cancer is treated by essentially sequencing tumors of cancer patients and then matching that genetic information to medical health records by creating this. So you basically create this vast library of healthcare data, and it's then applying machine learning to this data to determine the therapies that are likely to be most successful for patients based on individual circumstances. So this is a great example of how you can use machine learning, big data, to actually transform, a disease such as cancer. Recursion Pharmaceuticals is another one that's probably worth mentioning in this vein. They're using machine learning to hunt for new therapies. They're essentially changing the way that we discover drugs. And they've got one of the world's most powerful supercomputers who are basically carrying out over 1 million experiments a week with 200 employees at 20% cost of a normal research program. So these companies have vast implications for the industry over the long term. And I think this is probably one of the areas that we're most excited about.
Did you used to hold Benevolent AI, or am I imagining that?
What was that company, James? Sorry, I missed it.
Benevolent AI.
Not one that rings a bell.
Okay, no, I think it was in the Woodford portfolio, but it was the same sort of idea that you could, sort of go through massive data and use it to suggest potential therapies. Cool. There's lots here. Space is obviously quite exciting. We've got a whole new space investment trust at the moment. Can you talk about SpaceX, please?
Yeah, sure. So SpaceX is obviously, again, one of our more topical holdings, and it's interesting that the space question we get, because I think for us, this is more than the billionaires competing in terms of who gets there first, or from that side of things. So I think our investments in space is really about the sort of the structural changes that are taking place, and that's really to do with SpaceX's ability to really lower the costs of launch over the long term, and what implications that has. And I think that for us, what they're doing for the industry as a whole and a cost perspective is massively exciting. I mean, SpaceX is one such example. We also have a company called Relativity Space, who are essentially using 3D printers to print a rocket ship, which sounds quite out there, excuse the pun. But these companies are really revolutionizing the space industry, both from a cost perspective and what that means, longer term, implications, such as, could we be living on Mars? What does that mean? As I say, it sounds pretty crazy at the moment, but these companies have that in their line of sight. Musk has famously said he wants to use SpaceX, to make a multiplanetary species. And what they're doing with their new Starship, which is obviously the larger rocket that they're developing at the moment, has that as its aim. So it's a phenomenally exciting area for us. But yeah, there's more to it than this is somebody mentioned it last week, the joyrides of the billionaires. For us, it's about these companies lowering the cost of the industry and what implications that has over the long term.
So how long a sort of timeline are you looking out, thinking, well, this does all right now, but it could make a fortune in 10 years time or 20 years time, or how long would you consider?
Yeah, I mean, it's a difficult question. I mean, as you probably know from our philosophy, I mean, we don't think about things over 2-3 year time horizons. We think about what can happen over the next decade. And interestingly, it's kind of an interesting observation that our companies, especially in the private sphere, say to us, it's something that really distinguishes the line of questioning that we take with companies, which is how do you see your business in 10 years and beyond? And I think by having that sort of vision and ability to think about what the world could look like in 10 years time or more, it's quite a difficult skill. Our brains are made to think in a linear fashion. It's very difficult to think exponentially, because exponential change is kind of so far from the status quo. And as analysts, I think you're so used to putting in sort of cold hard facts into a DCF. But actually, for what we're trying to do, there's quite a lot of imagination that's required. Space is probably a good example there about what the world could look like. The future of transportation. We have companies that are developing flying taxis. You know, there's no need to say that in a few years' time, you know, if you would get a flying taxi, you know, between A and B. This takes imagination, and as I say, I don't think most of us are. It's a difficult thing to think in those sort of exponential ways.
Yeah, true, fair enough. And you mentioned, well, Tesla's in there. That's been sold down. What drove the decision to actually reduce the stake in that?
Yeah, no, as you know yourself, I mean, Tesla's probably been our, I would say, our probably highest profile stock over the last few years. And just to give you some context around that, James, about 83% of our holding in Tesla was actually sold last year. Now, as I'm sure you're aware, the stock had a phenomenal period of performance. And, you know, while we don't have hard limits on the maximum amount we can hold, we still do have diversification parameters in place. And I think if we'd allowed Tesla to run, I think the analysis was it would have been 30% of the portfolio at one point if we didn't trim it. So, you know, from that basis, we did trim our holdings in Tesla. But that's not to say that we don't continue to see, you know, great upside in Tesla. You know, we still think the company is executing phenomenally well. You know, it's not demand constrained. Yes, there might have been some supply issues, but they have navigated the chip shortage better than peers. So we're still very, very excited about the long-term potential for Tesla. But I think what is probably more interesting in this space is that if I spoke to you, I guess maybe last year, we would have said that, you know, we're very, you know, keen to try and, you know, reinvest some of these proceeds into the companies that are tackling some of humanity's biggest challenges, so the likes of, you know, decarbonisation. But we'd really struggled to find companies that have our combination of, you know, a good competitive advantage, you know, good visionary founders and management teams. And I would say that in the last sort of year to 18 months or so, we have actually managed to buy a number of companies who are, I would say, you know, in this decarbonisation theme, which we're very excited about. So to give you a good couple of examples there, we bought last year the company Northvolt, which is actually a company led by a former Tesla engineer called Peter Carlson. Northvolt, in one line, are essentially trying to become Europe's largest supplier of batteries for electric vehicles. I think they're targeting about 25% of Europe's battery production by 2030. So Northvolt's a company that we've added to the portfolio. We've also added the company ChargePoint, which is one of the largest electric vehicle charging networks in the world. It's largest in America. They're aiming to expand into Europe, which is quite underinvested, as we probably know. And we've also added a company recently, actually, just in the summer months, called Redwood Materials. Again, part of the kind of the Tesla mafia, the ex-Tesla mafia. I would say that the co-founder of Tesla, a guy called J.B. Straubel, has formed this company, Redwood. And essentially what they're doing is recycling batteries and battery materials. You know, as we, you know, more EVs take to the road, we really need better recycling infrastructure, you know, to handle what is potentially, you know, nickel, cobalt, lithium shortages, you know, in the coming decade. So we think that Redwood is in a very good position to actually, you know, capitalize on this, and actually we're excited about these companies. So I would say while Tesla, you know, continues to be a top holding for us, you know, we have added a number of companies around this theme, which are really interesting as well.
Is there sort of an ESG filter on what goes in the portfolio? I mean, one of the questions here is about the sort of environmental impact of space tourism. Would you not buy a company because you thought it was damaging the planet, or bad governance, or?
Yeah, it's a question, obviously, that we're getting more and more of on an ESG perspective. And I would say that obviously, when you look at the portfolio, you know, as a whole, I would say that while we don't actively market ourselves as an ESG fund, by default, a lot of our I would say a lot of the ESG considerations are actually naturally baked in to what we do. You know, some of the questions that we ask ourselves in the research process is, you know, does this company, you know, enhance society in any way? You know, we do our question framework that we analyze companies on is designed to investigate not only the company's opportunity and their financials and growth prospects, but also a company's character. They are core, you know, to what we do. So while I would say that, you know, we do obviously concentrate on those companies that can transform society, you know, help climate change, you know, we don't. I would say that we're devoted to the underpinnings of ESG, but we don't find some of the methodologies that have become common practice all that helpful. So we don't really believe that sort of box ticking is the way to achieve this. But we view the objectives behind ESG as critically important. But we have some problems, I guess, with the approach of some, you know, some of the common practices, I would say.
Okay. It does look as though there's been a bit of a shift into healthcare. Is that a deliberate thing, or is that just where the opportunities are room?
Yeah, I mean, I think I mentioned this or you mentioned it right at the start. You know, it has been a really kind of interesting 12 months, you know, for the portfolio as a whole. I mean, for those people that know Scottish Mortgage, you know, and such an important part of our exposure over the past 5 to 10 years has been, you know, the rise of those big internet platforms. So in the West, you know, the West, it would mean your Facebooks, your Alphabets, your Amazons, and in the East, it would be your Alibabas, your Baidus, and Tencent. And, you know, those companies obviously became extremely large and extremely powerful. But for Scottish Mortgage over the last sort of 12 to 18 months, I would say we've become much more discriminating in what we own in this space. So, you know, we sold out of Facebook, we sold out of Alphabet, we sold out of Baidu, and we've been trimming Amazon. And, you know, we can go into those reasons if you would like, but that sort of redistribution of capital, if you like, over the last 12 months, both from the sale down of those platforms and the likes of a Tesla, has been, I guess, redistributed into areas such as, you know, the decarbonisation names that I mentioned, but also some of the healthcare names like I've cited there. So Moderna, obviously, being one. We've added in private funding rounds to things like Recursion, which actually went public a few months ago as well. So I would say it's not such a call, James, on, you know, we're actively trying to increase our exposure to certain areas. It's not like we're targeting having a certain percentage in those circles, if you like, but it's really about where we're finding the opportunities and where we see the long-term potential. And on healthcare, I think there was one of our colleagues gave a good quote, which was Steve Jobs, I think he said, in one of his last sort of predictions, if you like, was he said that the intersection of, or the application of technology to healthcare and biology was probably going to foster some of the greatest innovations of the 21st century. And I think that really sort of echoes, you know, what I've said there in terms of our thoughts on, you know, how healthcare can be transformed with, you know, Moore's law continuing, with the application of machine learning, big data to industries that have been very traditional and slow in practice.
We should talk about what's been going on in China.
Yeah.
Especially, so Alipay, which I think is Financial, isn't it? What have you done with the valuation of that? Has that been written down?
Yeah,
and
so obviously.
Also, what have you done with holdings in things like Tencent and Meituan? Have you decided to top them up, or are you going to sell them?
Yeah, so maybe just starting, I guess, on the kind of overview or the backdrop on China at the moment, because obviously, as you're quite right in saying, it's one of those areas we're getting a lot of inbound questions on. So what can I say on it? I would say that maybe a helpful starting point for us is that, you know, we don't have a blanket view on China, in inverted commas. You know, for us, it's very much looking at the companies on a stock by stock basis. You know, because the issues they face are often very, very different. So we're kind of working through the companies from the standpoint, as I've said, sort of mentioned earlier, as being long-term, supportive owners rather than making sort of snap judgments. But I think maybe some observations from our side, which is that if you look at the performance of the trust over the last year, it has been obviously the Chinese companies that have been underperforming. But as you know, we have a long-term time horizon. So what we're really kind of finding is that there's a cultural difference, I would say, between the companies such as your Alibabas and your Tencents, and what I would call the next generation of companies. We've maybe talked in the past about our ability to now look at these companies that are finding the white space between Alibaba and Tencent's business models and creating new businesses, such as likes of a Meituan or a Pinduoduo is a good example there. And we think that the founders of these companies really seem to have their business model and their interests much more aligned with state aspirations, I would say. The founders, of Meituan and Pinduoduo, they typically have quite different attitudes. They have a low profile. So I think there's a bit of a cultural difference there from that perspective. But for the likes of a Tencent that you mentioned there, James, I mean, the question here for us is probably, and Alibaba, I guess, to the same extent, is that the big question for us, I guess, is how big and profitable will Tencent or Alibaba be allowed to become? The companies are stylistically very different. There is a chance Alibaba, it could be broken up, it could become, somebody gave the quote the other day, it's like it could become Ali Ban Ba, and in which case, does it function more like a regulated utility? Is there that cap on profitability? That's one of the things that obviously we're thinking about, certainly from a company like Tencent's perspective. This is a company that makes, it's very, very profitable. I think they make something like 35% operating margins. This could be a threat. But the other side of it is it could actually look at it slightly differently, where they have plenty of cash to reinvest in, schemes or projects that are more directly aligned with the government's interests. So it really is, it's apologies, I don't have a great answer on it, James, but it really is looking at these companies on a stock by stock basis. And really, as I say, trying hard not to make any snap judgments. One of the big advantages, I would say, is that we have an office in Shanghai. So we have colleagues on the ground in Shanghai who have got very good relationships with a lot of these companies. Something like Alibaba, we've held since 2012, since it was private. We've actually not sold a single share of Alibaba since we first invested in it. And again, that gives us sort of access, really trying to understand what's happening, on the ground in the region. And I think that really helps, tailor our thinking. So there's been no big changes, in terms of the portfolio. We haven't sold anything. We haven't topped up anything. As you would expect us hopefully to do. It's a case of just going through the situation, speaking to the companies and working through the issues. As I say, from that sort of long-term supportive perspective.
One quick question: what triggered the sale of Facebook?
Yeah, sure. So I would say on Facebook there was probably, well, maybe taking a step back. Facebook is the dominant social platform, but for us it was becoming apparent that the way that platform was being used at scale was causing challenges and associated with that success, and that obviously brought that degree of scrutiny. But I would say, maybe thinking about it overall, there was probably three reasons I would say for the sale of Facebook. The first observation that we had, certainly in the 12 months prior to the sale, is that we thought that actually Facebook was no longer seen as the preferred destination for the most talented developers, and we thought that was really going to limit its ability to improve software and stay ahead of the curve. So, we obviously spend time, actually understanding, the industries here. So that was maybe the first reason. The second reason was probably relevance. You know, you had competing social media platforms such as TikTok, which has just gained, you know, phenomenal traction. So we were kind of worried about that. And then the third thing was obviously the regulatory side, probably the most important reason. You know, their scale and some of the mistakes regards data security led to that sort of rising scrutiny. They obviously worked hard, they invested a lot of money to address those issues. But for us, as I say, we were just sort of concerned about how that sort of impacts the long-term growth trajectory. I mean, for us, you know, we think it will remain probably a hugely important platform. But as I say, we probably had some concerns on the sort of the people relevance and regulation, you know, probably in a nutshell. And that probably lowered our expectations of the future growth that we have for Facebook.
Okay, cool. There's a question about the sort of evolution of transport theme and flying cars and zipline, and I think the thrust of it is how realistic is these sorts of markets going to, you know, when are we going to be able to get a flying taxi or see a flying drone delivery? How far out are these things?
Yeah, so it's a good question. One of our colleagues has actually seen Lilium in Germany last week, and it's probably sooner than you think. Maybe a better place to start though would be on something like Zipline, which is the drone delivery company. I'm not sure much people know about Zipline, but it's essentially what they're doing is they are a medical delivery company using drones. So in sub-Saharan Africa mainly. So to give you a sense, if you're in rural Rwanda, for example, in a hospital there, and you have got requirements for a blood transfusion, blood will be packaged up and put in a drone and flown to a remote location within 30 minutes. I mean, this industry is phenomenal in terms of what it's doing. Obviously, with the pandemic, drone delivery has obviously come into itself. You know, the benefits of drone delivery have been apparent, and Zipline really are at the cutting edge of this in terms of what they're doing with their drone technology. So for something like Zipline, I think we continue to see, again, you see more application in terms of what they're doing. It's not just about, you know, what they started off with is blood. It could be vaccines. It could be any number of things. So I think that for that, again, the pandemic has probably accelerated sort of the behaviours of and how we're actually operating than maybe sooner than we would have expected as well.
No, it's all fascinating stuff. I mean, you've seen phenomenal growth of the funds over the last couple of years, but you've been very good at buying back stock too when it goes to a discount. Is that a formal target now to try and keep it trading at asset value?
No, we don't have, you know, if you look at our liquidity policy, you know, we don't have formal targets for buying back and issuing shares. I mean, obviously we do try and keep, you know, the share price close to the NAV, but yeah, there is no formal policy whereby, you know, if we hit, you know, 5% either side of it, there's no such policy in place. You know, we say that we really only operate under normal market conditions, and I would say that's really the best way to think about the issuance and buyback strategy. For us, there is no targets there. We don't really find it helpful to give targets, but I would say that, you know, certainly in the last, you can see there how the share price has traded over the last, I guess, the last year or so. You know, we were sort of buying back a little bit at the beginning of the year. You know, the last sort of month or so, we've been issuing a little bit more. So yeah, I would say we're sitting at a kind of nice premium at the moment. But yeah, as I say, we don't have any sort of formal targets, if you like, around that. Is there any sort of limit to the size that it could get to? I mean, the amount of money just flowing in was incredible. But if that kept going, does the size where it becomes a problem? Yeah, I think we're a very long way from being worried. I would say that Scottish Mortgage is a very liquid portfolio. You know, we could probably deploy 2 to 3 times the same capital in our publicly listed holdings given, we only own a very small proportion of these large companies, likes of Tesla, it's now nearly $900 billion company, Amazon, Alibaba, Tencent, these are not small businesses. So we have ample capacity there. It's an interesting point on the private side, because actually our scale is putting us, I would say, in a much stronger position. Given we're able to write larger checks to those businesses, I think our size is really proving quite a huge advantage. If you're a private holding, you would rather make sort of, a few phone calls to a few investors who can write a large check than 20, 30 investors, and try and accumulate the capital that way. So we actually think that our scale is having quite a meaningful advantage, especially in that private space. So yeah, from a scale perspective and size, there's absolutely no worry, and we're a very long way from being with it.
Cool. I think we should probably finish up there, but that's been really interesting. Thanks, Claire.
Yeah, thank you for having me.
No, we'll keep going. We'll keep following you, and we'll get you back maybe in a year or so.
Same.
But see how the portfolio is going then. But at the moment, yes, it's great. So there's the legal bit, and then just thinking about what we're doing coming up. I won't be here next week, but Jane will be talking to Richard Pinder from Literacy Capital, which I think is a very interesting little fund. It's interesting because of what they're doing on the charity side in terms of trying to reduce UK literacy rates, but also it actually seems to have a very interesting private equity portfolio. So I think it's going to be should be a good chat. And then talking about backing British companies, we've got Trader British Opportunities in on the 5th of November. So that will be interesting too. And then we've had Hannes and Pantheon. I've been talking about our ESG webinars. We've got some more colour on funds signing up. So that list is growing all the time. So keep following the events page. And if you haven't signed up yet, please go to the events page and do that. I'm sorry if I didn't get around to all of your questions today, but there's obviously plenty to ask Claire for next time. So thank you once again, and I'll see you in a couple of weeks.